Okay, let's dive right into this explainer. We are looking at what is very likely the single biggest infrastructure-driven property boom in the history of the UAE. We're talking about a massive, complete paradigm shift in how people actually live, work, and commute between Dubai and Abu Dhabi. And for forward-thinking investors, well, the window to really capitalize on this is open right now, before the trains even start running. Here is our highly structured roadmap for unpacking this. 1. The UAE Rail Revolution. 2. Two distinct rail projects. 3. The proximity premium. 4. Top investment corridors. And finally, 5. The investor playbook. Let's start with Section 1, the UAE Rail Revolution. So, for decades, getting between the Emirates has been entirely reliant on hitting the highway. But that is all about to change, and it's completely rewriting the real estate map. There's a brilliant quote from Arabian Business that perfectly captures our core thesis for today. Connectivity is the single biggest driver of rental demand. When a neighborhood suddenly goes from being, far away to being right on the rail line, literally everything changes. Rents go up, vacancy drops, and property values just naturally follow. It's a pattern we've seen all over the globe. But here's the kicker. In the UAE, this shift is happening right now, and it comes with a massive structural advantage you just won't find in other global markets. And that unique baseline advantage? It's zero. Exactly zero. We are talking zero capital gains tax, zero land tax, and zero annual property tax. When you combine the kind of aggressive capital appreciation that historically comes with brand new rail infrastructure with a completely tax-free environment, the compounding effect on your net returns is honestly just staggering. Aside from your standard one-time registration fee when you buy, you keep what you make. Moving on to Section 2, two distinct rail projects. If you follow real estate news, you've probably seen a lot of headlines that kind of blur these upcoming transit updates all together into one big project. But understanding the difference between them is absolutely critical, because they have totally different timelines, completely different station locations, and totally different investment implications. Basically, we need to separate the conventional inner-city network that's launching very soon from the highly futuristic project arriving a little later. So first, you have Etihad Rail. This is a 900-kilometer national network built using existing freight infrastructure, and it pivots to passenger service in 2026. Then, on the other hand, you have the ultra-high-speed rail. This is a brand new $8 billion dedicated line targeting 2030. They are two completely different beasts. When you look at the raw numbers, it's clear the 2030 high-speed line is essentially going to merge Dubai and Abu Dhabi into a single massive metropolitan zone. Just look at those travel times. The 2026 Etihad Rail brings the commute to a very respectable 57 minutes. But by 2030, just 30 minutes. Actually, at 350 kilometers per hour, the high-speed rail means you could easily live down in Abu Dhabi and commute to an office in central Dubai faster than most people who actually live inside Dubai itself. It's a total game changer. Which brings us to Section 3, the proximity premium. This is where the historical data really starts to light up our strategy. Historical patterns, which we've seen play out in London with the Elizabeth Line or in major hubs in Singapore and Australia, show us that properties near confirmed train stations begin surging in value well ahead of the actual launch. In fact, properties located near confirmed UAE stations are already seeing an average price growth of 9% over just the past 9 months. For that 2030 high-speed line, you should absolutely expect to see the next massive spike hit around 2028, right when construction visibility really peaks. In real estate, the biggest gains always go to the early movers. To put this into perspective, the starting yield in Dubai makes the compounding effect of this impending rail boom incredibly powerful. Let's say you look at a Western market like Sydney or Melbourne. Sure, you might capture some capital uplift from a new train line, but you're starting from a pretty paltry 3.5% gross yield. But over in the Dubai South Rail Corridor, you're getting double that. You start at a 7 to 8% gross yield right out of the gate. So you get to pocket that high cash flow while you wait for the massive tax-free capital appreciation to hit. Let's dive into Section 4, top investment corridors. Now that we've got the timeline down, we can start mapping out the specific areas poised for the biggest impact. We really need to contrast the immediate yield plays against the more patient capital growth targets. If you're looking for near-term impact, Dubai South and Jumeirah Golf Estates are right on that 2026 Etihad line. Jumeirah Golf Estates is more of a premium lifestyle play, whereas Dubai South is your ultimate value entry point, completely backed by massive master plan developments like the Al Maktoum Airport expansion. On the flip side, Al Jadaf in Dubai and Yas Island in Abu Dhabi are fantastic early mover plays for the 2030 high-speed line. Drilling down into how accessible this really is, an entry point of roughly 294,000 Australian dollars opens up that Dubai South Corridor for you right as the 2026 rail launch approaches. I mean, this is practically unheard of for an international market that has these kinds of massive structural growth drivers. You are literally buying directly into a precinct designated as a primary future urban growth zone just moments before the passenger trains start running.
But hey, we can't ignore the other side of the tracks here. These upcoming structural changes mean an investor can realistically target Abu Dhabi's property market while still maintaining total access to Dubai's massive pool of tenants. By slicing that commute down to just 30 minutes, these two totally separate emirates essentially become a single fluid market. So you can target the leisure hubs on Yas Island or maybe the cultural prestige of Saadiyat Island, both of which have confirmed high-speed stations, by the way, and still easily attract Dubai-based professionals. Plus, investing in these premium Abu Dhabi areas easily pushes you past the 2 million dirham threshold, which is exactly what qualifies you for the highly coveted UAE Golden Visa.
Finally, Section 5, the Investor Playbook. Spotting a massive trend is great, but it's really only half the battle, right? Knowing exactly how to safely position your capital is what actually puts money in your pocket. Following these 6 distinct steps will safely guide any foreign investor from the initial strategy phase all the way to securing remote, zero-tax, freehold property management. Step 1. Define your strategy. Are you chasing that 2026 yield in Dubai South or the 2030 capital growth in Abu Dhabi? Step 2. Engage a licensed broker who truly understands international currency modeling. Step 3, and this is absolutely crucial, confirm your chosen precinct is a designated freehold area. Thankfully, all the rail corridors we've just discussed are. Step 4, sign the sales and purchase agreement. Step 5, simply pay your one-time registration fee to the land department. And Step 6, set up remote management. Local property managers handle the day-to-day and remit your rental income directly back to you, 100% tax-free from the UAE side. It's really that streamlined.
The most crucial takeaway from all the data we've analyzed today is that the biggest financial gains materialize well before the trains actually begin running. Remember, we saw a massive 23% excess appreciation on London's Elizabeth line before it even opened its doors. Dubai and Abu Dhabi are sitting precisely at this exact pre-launch inflection point right now. Think about it. 10 of the 13 Etihad Rail trains have already been delivered and tested. The $8 billion in high-speed contracts already awarded. It is happening and the window is closing fast.
So, I want to leave you with this final provocative thought. Which UAE rail window matches your strategy? Are you targeting the immediate 2026 Etihad launch to maximize your near-term yield? Or are you positioning yourself early for the massive 2030 high-speed capital growth boom? The infrastructure is locked in, the tax advantages are completely unparalleled globally, and the map of the UAE is officially changing forever. The only question left is, where are you going to place your pin?